It was going down like crazy. There was no end to the world. It was like moving down and down.
Usually when there is an interest rate cut, we see markets shooting up, going back up.
The Indian rupee has hit an all-time low of 85 against the dollar.
Why should Fed interest rate decision impact our markets a lot?
Should I invest into the US market or should I invest into the Indian market?
Which are the sectors or stocks that can benefit from that?
Asian Paints is in slightly troubled waters. Things do not seem to be really nice with the company.
They want to start this movement.
All the paint stocks are stagnant. I don't know what is even happening there.
For me, this is like the curious case of the Indian paint industry. Asian Paints is here to win. I really would bet my money on them.
Wasn't algo trading legal for retail till now?
It could cause systemic errors is what SEBI is worrying. Algo trading, I believe, is an evolved form of trading.
I see this as a positive step for the industry.
You can actually code it and click a button and the computer do it 1000% more efficient than you and get it done without any emotional bias. Why would someone not do it?
In today's episode, we were able to have a lot of discussions that drove up our intellectual curiosity. Because we started first with the story of what is now a very tough period for the stock market as well as traders in the stock market. Then we got into why that is a tough period now, which is because of the US Fed interest rate decision. And we tried to break that entire section down in a way that even a beginner can understand, starting with what is interest rate, what is a US Fed, and even getting into how interest rates affect the stock market. Then continuing on the Bruce blue chip argument that we had in the previous podcast, we talked about a major mega wealth creating stock in the Indian stock market, which has not been performing in the last 1 year. The stock is down by 30% from January to today. And the name of the stock is Asian Paints. So we get into what is happening with Asian Paints right now, what is happening in the paint industry, and what all things need to change so that the stock can start moving up. I think this discussion very specifically was very interesting to me. And the third discussion, if the first two were for casual investors in the market, the third one would be for the trader in the market. It was all about SEBI's new algo trading regulations. So we tried to break it down. What does the new SEBI circular say on the new algo trading regulations for retail? What are going to be the next steps? When can we start seeing things move? And why should you care about it as a normal trader? In fact, we all believe that algo trading is going to be the future of trading in the Indian stock market. So make sure you watch till the very end so that you can consume all of these three stories. And in turn, we hope that this will create a spark in you, create a drive or intellectual curiosity in you that will help you get started in your stock market investing and trading journey. So before we start, don't forget to subscribe to this channel if you want to see more of such content, and also subscribe to the marketfeed clips channel where we'll be posting bite-sized portions of the same podcast so that you can consume it more easily. Also, if you're interested in the audio only experience, we have the Spotify podcast, so go follow us there as well. Let's get started. Hey, so Nifty is back at its 200 days moving average. Despite moving up well throughout the last multiple weeks, again, now it's back to that zone. And that's where the markets are ending up right now.
I know what Sharik would say now. Last time when it was at 200 DMA, he said it was an amazing opportunity to accumulate Nifty Bs and invest into Nifty. Now this is what again he's going to say.
Absolutely. That's always the case. But again, this week, we really have to talk about certain other stuff as well. Because for me and for us at MarketFeed, it's been a bittersweet week of sorts. Given our automated trading strategies, again, did not do well this week. But again, looking back at the week and looking at the performance of the strategies, it's very interesting because Friday itself, where we start our weekly option selling strategies, Friday itself, if you look at the charts, was a crazy day. I mean, the market started moving down a lot.
Absolutely.
And there was a quick turn and then it started shooting up like crazy.
Yeah.
And that's on a Friday where you start your positions for the upcoming weekly expiry. That's very, very critical for any weekly position.
Proper short covering, reaching the recent swing high.
Absolutely.
That's what happened to Nifty. And I think a lot of option traders would have gotten in trouble on Friday.
Yeah, so again, bittersweet because Friday started kind of difficult for our trading strategies, but then our strategies made up on Monday, Tuesday, Wednesdays. Like the losses were getting covered and the strategies were kind of moving back into profits. And then, hey, today morning happened, right? Today morning was crazy. It was a more than 300 points gap down opening in Nifty, and yes, our strategies got hit. And we have 3 strategies out for users to subscribe and for automated trading. 2 strategies are down by nearly 2%, and 1 strategy is down by more than 4%. And this is also interesting because last week our strategies made more than 2% profit. We did not talk about.
about
We
Yeah.
did not talk. I really don't want to use this show to come and talk about, hey, when we are making good profits. But yeah, last week we made more than 2% profits. This week, 2 strategies are down by 2% and 1 is down by 4%. But hey, that is how it is, right?
Yeah. Our quant research team called it as a 3SD event, 3
Yes.
standard deviation event, where this is never or this sort of volatility is not an expected event
Yeah,
in
it
the
is-
Indian market and in our strategies.
Correct. It is very rare. Like if you actually, this is all data driven. Whatever we do, anyways, is purely data driven. If you look into last 4 years of data, and if you analyze the movement of Nifty, the kind of volatility that we saw this week, and for that matter, certain weeks in this quarter, has been like he rightly said, internally in our team, they're saying it is a 3rd standard deviation sort of an event, which means that this is very rare. This normally does not happen, and that's where our strategies are taking a hit. But yeah, hey, that's what it is. And to be very honest and to maintain full transparency here, this quarter, October, November, December, hasn't been that great for our strategies. We have 2 more weeks left for trading. Let's see how we are ending this quarter. Yeah.
For now, I want to formally welcome all of you viewers into the 6th episode of the Aftermarket Podcast. So yes, this is Ajay Ajit, this is Nihal.
Hi.
And this is Sharik Shamsin, CEO and co-founder of MarketFeed.
Hi.
So what's our first interesting story for the week?
The first story should be linked to the Nifty 300-point gap down that happened. That is again because of the interest rate cut decision by Fed. So we know in US the interest rate was around 4.5. Then Fed cut the interest rate by 25 basis points and it is now down to 4.25. But usually when there is an interest rate cut, we see markets shooting up, going back up. But surprisingly, US markets have been down a lot and even our markets are not doing that great.
Did you actually see how it went down?
Oh, it was...
I mean, I was actually looking into the market. I was looking into S&P 500 and it was crazy the way it was moving down. It was all steady, slightly moving up. It was all good. And the moment the news was announced, it was going down like crazy.
Absolutely.
And like there was no end to the world. It was like moving down, down and down. And at a point there was a pause and okay, I thought, okay, this is the point of pause. Maybe the market is reversing from there. And from that point,
it
an
again
even
fell
larger
more.
point, a fall started and it was crazy. But yeah, back to you. Yeah.
Absolutely. So when viewers see these interest rate decisions coming out, they don't understand who Fed is, what Fed is. When they cut interest rate, what will happen? When they increase, what will happen? Why should we even care about? Not many people understand it. But again, when we are sitting here, our duty or our responsibility is to make our viewers understand this complex stuff in a very simple manner. So very beginner friendly kind of conversation let's have and give them value, who this Fed is, what they do.
The US Federal Reserve is a RBI or the Reserve Bank of India equivalent in the US. They control the interest rate decisions, they control the decisions on fund flow or money flow in the economy, and they take whatever RBI does in India to control the monetary policy of the country. The US Federal Reserve does it for the largest economy in the world, which is the United States of America.
Now that I understand, Fed is the central bank of America and they have a larger take in what should be the interest rate in their country. But first we have to break down what is interest rate even.
Yeah, so I want this section to be very beginner friendly. So I'll try to break it down as much as I can. So the interest rate is nothing but what the central bank or US Fed in this case charges as the interest rate on a loan that they give to the banks in US.
Okay, so banks would take loan from central bank and what is the interest rate central bank charges from these banks is what is the interest rate decision.
Yes. So that in turn will impact what is the interest rate that these banks will charge to the customers, their businesses, the normal people, right, in the country. So that will also be dictated by eventually the US Fed interest rate.
So if Fed increases the interest rate, banks will increase the interest rate to the end consumer or the customer, whoever it is.
Yes. So
But-
normally that happens whenever the Fed or RBI increases interest rates, the banks in the respective country they'll also increase and decrease it based on the central bank's decision.
So by now, whoever is watching would have already understood what interest rate is. But they should also have clarity why they keep changing it.
So any country's economy, they're a very delicate thing that needs to be handled with a lot of care. Okay. So this Fed interest rate or the US Federal Reserve has a lot of tools at their disposal, and the interest rate is one of the largest of them. Okay, this interest rate and the decisions around it will define what is going to be the growth rate of the country, the GDP growth rate, what is going to be the labor market looking like, what is going to be the inflation in the country, right? All these are going to be dictated by the key interest rate of the Federal Reserve. So that's how important it is for the economy.
Because again, I can understand central banks would be giving out loans to the banks. Banks would be again giving out loans to the end consumer. So if interest rates are increased or decreased, the purchasing power of the end consumer also fluctuates a lot, and that causes a lot of butterfly effects on the whole economy.
Yeah, so I'll give you a mind map there to again think more or think better about it. So whenever inflation in an economy goes up really well, right? That means there's something wrong with their economy. Prices of everything is increasing really fast. The interest rate is used as a tool to bring back that inflation down or bring down that inflation. So interest rates will be increased whenever inflation is increased, and that will promote or that will cause the money flow in the economy to slow down, and in turn, inflation will come down. That's the theory, right? And again, whenever interest rates are cut, that's a good indication for any economy around the world. That means the economy is ready for growth, right?
Absolutely.
They're not afraid of inflation. They're ready for growth, and the companies can borrow cheaper, people can borrow cheaper, and the economy can prosper.
So I remember a very famous saying I've heard before. Inflation's very simple definition is more and more hands for less and less resources. So what happens is when people have a lot of money in their hand, they go out and start buying everything.
Yeah.
So that is more and more hands. Because more money in people's hands, they're buying everything, so less resources, so a lot of demand. So that's where prices go up. So that's where you're saying inflation is happening.
Yeah.
So when inflation is happening, the Reserve Bank or the Fed is looking at it, hey, this is not good. Prices are increasing. We should control. Okay, let's increase the interest rate. So now the interest rates are increased. People have less money in their hand because the cost of capital has increased. They are getting maybe loans at higher interest, so they're not taking loans anymore, or companies are not growing, so they're not paying a lot of salaries. So people have less money in their hand. So they have less money. So now they wouldn't spend and buy stuff, because of which prices would come back. So like you rightly said, it's more like a tool. Interest rate is like a tool or a lever for the central bank of any company to control the delicate instrument what the economy is.
Yeah,
Absolutely.
and it is a very tricky tool.
Yeah.
Again, as I said, economy is a very delicate thing. So you have to move it around very carefully.
Right.
And that's why all these meetings, so the Fed meetings happen once every 6 weeks. So every year there are 8 FOMC meetings. Okay. And I'm sure the best people in the world are actually sitting there and taking these decisions. In history, there have been a lot of times where things have gone wrong. The dot-com bubble, the 2008 housing crisis, the 2020 fall. But I'm sure that we would have been in a much worse situation if things were not controlled very tightly.
Okay, while we understand all these politicians and big economists try to, handle this economy very delicately, and basically this Fed interest rate decision happened in US. But why should Fed interest rate decision impact our markets a lot?
All I can think about is the famous proverb, which you also probably know, which says, when the US sneezes, the whole world catches cold.
Absolutely.
Right? So the US is the largest economy in the world, the largest superpower of sorts. So whatever happens there does have a direct impact on the entire world's economy. We have seen that in 2000, 2008, multiple instances. So that is very, very clear. But for me, what is even more important with interest rate as a stock market participant, as an investor, is the fact that it has a direct correlation to how the stock markets also function. When interest rate is increased by the central bank, what happens is, for normal companies, when they take loans from banks, their interest rate increases. Even if normal people go to bank for taking loans, their interest rates also increase. So what happens? People will take less loans. Companies will take less loans. So companies will spend less on their growth.
Yeah.
So their revenue will not increase. If their revenue does not increase, they'll pay less salary to people. So from salary perspective, also people are making less money.
Yeah.
They will also take less loans because the interest rates are high. Companies are also not spending for growth, and people are also not spending to buy the products made by the company. What eventually happens? Less revenue for the companies, and these companies' price would probably go down, which means the stock market could do bad. So the larger point being, I know I spoke a lot. I'll just connect these two. When interest rate increases, the stock market could do bad. So just the opposite of this is, if the interest rates are reduced, stock market could do well. Very clear?
Yes.
Now that is where I'm coming to the interesting point, which you were rightly mentioning in the beginning. Now we saw the Fed is cutting the interest rate from 4.5%. It is coming down to 4.25%.
Yeah.
So as per this story, interest rate is coming down. So the stock market should do
Better.
well, better. But what did we see yesterday? What are we seeing today?
Markets are again crashing.
Quick reaction where market is moving down when the interest rate is being cut. So that seems to be an anomaly.
Yeah.
So maybe you can talk about why that is happening.
So the interest rates have been cut, but along with that interest rate cut, they also gave a guidance for next year, what the Fed thinks could happen in the US economy next year. So they said one specific thing, that the inflation could increase. And because of the inflation increasing, they will not be cutting interest rates as aggressively as they previously thought. Okay? This is not even about this year. This is about 2025. In 2025, they won't be cutting interest rates aggressively. Hence, the investors did not like it and the market went into a selling mood. But I also kind of think it's temporary and it is mostly profit booking. If you are looking at the US market, it's at a good position now. So maybe some profit booking also coming in between the way.
Yeah, and
Yeah,
I
it's
think
just a common principle in life, right? I mean, you get disappointed the most when your expectations are not met, and it just translates into the world of stock market as well, and that's exactly what we see here as well.
absolutely, yeah. I understand all the background story and theory, but how does Fed interest rate decision matter to Indian stock market?
So two economic factors that you have to understand. First one is the money flow in the economy and hence in turn in the stock market. So let's take the case of foreign institutional investors. They might stop throwing so much money into the Indian market. I know it's a funny statement because the last few months have not been great. In terms of FIA buying, they've been selling heavily. But generally, the FIAs won't be so lax in throwing money into emerging markets when such an instance happens. And on the second point, it is that the Indian rupee is getting devalued by quite a lot. So US is being seen as a safe haven, and because of it, the Indian rupee has hit an all-time low of 85 against the dollar. This is going to make things a lot difficult. Again, anyone investing into the Indian market, they'll rethink their opportunities. Should I invest into the US market or should I invest into the Indian market where I have to make certain returns plus whatever rupee depreciation to break even, right? So that's the thought process there.
Absolutely. So, rightly, like Ajay said, while dollar is becoming stronger, which are the sectors or stocks that can benefit from that?
Yeah, so there are these two very famous sectors which always get benefited whenever rupee gets weakened or dollar gets strengthened, which are very famously IT and pharma. And this time around, I think pharma is even well poised to capitalize on this opportunity, right? Because if you think about it, if the US economy could go into a not so great time, then the companies there, which are the customers of Indian IT companies, they might not be very willing to pay a lot and buy the services of our IT companies. So IT companies, yes, they can benefit from rupee weakening, but hey, if US is going to do bad, that is definitely going to impact them. But that is where pharma could do really well. If you look into the charts today also, pharma, just when this is happening, when the markets are falling, pharma actually did really well. It's kind of breaking out on the Nifty pharma chart as well. So pharma could do really well, could benefit from this, is something which I strongly feel. But then there are also all the export players in the country, because the companies which are exporting their goods or services outside India, they'll definitely be making their money in dollars in most of the cases. So they are also going to benefit. And companies which are importing a lot, it's going to be not a great time for them.
Absolutely. And we all know that India is the pharma capital of the world. So
Yes.
definitely banking that on a pharma sector to do amazingly well.
Yeah. So I think here we have to talk about what people expect from the Indian economy, and not just our Indian investors, but also global investors. They're looking at India as one of the most resilient economies that despite any or many other countries going into recessions, India has not gone into that situation over the last 3 years. And if you're looking at rupee being devalued or rupee touching an all-time low, it is still the best performing currency in Asia.
Exactly.
Yeah. So we have to understand that. And so everyone is banking on India being resilient throughout this tough phase for the global economy and for us to come back on top. Right? Come back on top going into the 2030s.
Absolutely. So that's where, if we are ending the session, this story, I'd like to bring the larger point being, hey, this interest rate cut of 4.5 to 4.25. These are all very short term, 2-3 months down the line, we might even forget this. So these are small triggers, and then there are knee-jerk reactions. So what we saw in the US market yesterday, why the Indian markets fell on Thursday, the gap down opening. These are all knee-jerk reactions. So always I get this point, and that's where I want to put this point across as well. Even our discussion was very basic. We are just trying to tell, hey, what is happening and the larger story of what is happening to the economy.
Yeah.
I think these triggers should trigger that thought in our mind.
Yeah.
Rather than market is down by 1% today, up by 2% tomorrow. None of us are going to remember this in the long term. But what we have to always get a cue from this is the fact that, like, what are our leaders thinking? What is the central bank of our country thinking? What is their outlook on the economy of that country in the next 1 year, 2 years? So US is saying something about the 2 years. Inflation rising. Is that signaling something large? So we need to have such larger thoughts, and that's what we are trying to trigger with the Aftermarket podcast here. So just trying to put across that thought as well. But yeah.
So I think that is where I think we should move on to the next story, which is...
Yes. Now I'll take you to the next story with a riddle. Small question time for you. And I'll try to put it across like how people on Instagram normally come up with reels, right? Okay. This is a stock. If you would have put in 5 lakh rupees 25 years before, this would have become 3.6 crore rupees today.
Oh.
This has given in the last 25 years nearly a CAGR returns of 24%.
That would have outperformed nearly any other asset class easily.
Absolutely, with great stability as well. This hasn't given lot of drawdowns as well. And also, this is a poster boy among the Indian blue chips.
Oh.
People love this company. You use this company in your home.
I think I
While
have
you
the name.
construct it in the paint industry.
But
then yes, there is only one name. Since you mentioned paint, it should be Asian
Asian
Paint.
Paints,
Absolutely.
yeah.
Asian Paints, a stock that a lot of people love. Even I personally have spoken a lot about Asian Paints in the past. But now it seems to be that Asian Paints is in slightly troubled waters. Things do not seem to be really nice with the company. Now, if you see in this calendar year, the stock is down by more than 30%. And in its entire existence, this is the year where it is, or this is the first time it is down by so much. So it's very interesting. So one, the stock is already down by 30%. Two, from the COVID times, it's only up by 50%, where even Nifty is up by more than 150%. So that's also very interesting. But even more interestingly, the revenue of the company in the last 3 years hasn't been moving much. It has been around 30,000 crores for the last 3 years. Revenue is stagnating. Profit is not moving much. Stock price is actually moving down. What is happening to the investors' favorite stock? Asian Paints is something I think we should definitely talk about it. A lot of insights there. So let's get into it is what I'll say.
So let's talk about the company first. So Asian Paints is the market leader in the Indian paint segment.
Yes.
So out of a lot of listed companies and even unlisted companies, Asian Paints holds a 50% market share.
Huge.
So they've been a winner throughout history, and they've been a proud torchbearer for the Indian paint industry.
And that is where we even have to bring in the vision the founders had. So there were basically 4 founders. They started Asian Paints, the company, in 1942. And in 1970s, they were the only company having a supercomputer, and approximately around 8 crores in that time they have spent to buy this supercomputer. And if you believe it or not, even ISRO didn't have any supercomputer back then. These guys bought it only because of the vision that they had, that they should run this company in a data-driven way. And they were analyzing so many color patterns. They were doing so much of analytics and data where they know how much of consumers, what do they want, at what price, what color they want. They wanted to do all of that in a data-driven process. So they got that supercomputer.
Yeah, so they've definitely innovated. They've definitely changed the face of the paint industry in India. And that's why, obviously, they have this 50% market share. And they've given the kind of returns they have given to the shareholders. But obviously, it hasn't been great for the company. And I'm not even coming from a share price standpoint, because, hey, share prices could move down at some point of time. Just because it has been delivering massive returns in the past doesn't mean that it will have to do that always, right? There's no obligation. But what I'm really concerned about is revenue not growing. I mean, the industry leader doing really well with a moat. The kind of moat Asian Paints have is at a whole different level. So having that moat, having the market leader still not being able to grow its revenue is a huge concern for me. Maybe that's where we should look at its competitors. I understand there are new paint companies also which joined over the last 2-3 years. But hey, what's happening to the competition?
So the entire competition is doing bad. So not just Asian Paints, but if you're looking at the entire industry, everyone's stock prices are down.
Yep.
Everyone's revenue is stagnating. So it's an industry-wide thing. So one, competitors not doing well with regards to their revenue and share price of listed players. And two, as you said, 2 new competitors and 2 big names coming into the industry. One from the house of Birla, Aditya Birla, which is being called as Birla Opus. And the second one, JSW Paint, from obviously the JSW family. So they are coming away, stealing some market share from all these listed companies. And at the same time, the rest of the industry is also facing very big demand problems in the Indian urban sector. Whenever you're looking into the economy around you or the places around you, it's interesting to see that a lot of new buildings are getting built.
Yeah.
But when I read the Asian Paints, the CEO's very certain interview, he was saying that the urban demand is very low. I was like, I couldn't process it. Even in Bangalore, whenever a tenant moves out of a flat, they make sure that they paint it. There is no discussion. They'll paint it anyway, even if you say you don't want it.
Yeah.
So in such a world, for him to say urban revenue is not increasing, I was actually surprised.
I mean, even I keep going back to Hyderabad every quarter, right? So every 3 months I go to Hyderabad, I see a whole new city coming up. I see so much of expansion. I mean, so many big towers being built. And I can only... imagine how many hundreds or lakhs of liters of paint would need to paint all these buildings. And I don't see that happening. Revenue's not growing. All the paint stocks are stagnant. I don't know what is even happening there.
Exactly. Again, I'm also not able to understand the fact that everywhere we look, we talk about the years of India, years of the growing country, which is India. Infra is going up. Realty stocks are actually going up. We see government projects happening. Government investing a lot on infra was actually a large theme from the last budget as well. So when we understand that a lot of infrastructure development is happening, we directly link paints to that.
Yeah.
Because we just think that, hey, if infra is being built and developed, then they have to be painted. And if they have to be painted, then Asian paints will have to be used. Forget Asian paints. The entire industry, some paint will have to be used.
Yeah.
And then paint companies' revenue will have to be increased. So it's very interesting to see that the revenues of none of these famous popular paint companies are increasing. So that is where I get this data, which is very interesting, which says that in the entire paint industry, only nearly 60% is organized, while the rest 40% is unorganized. So the only thought which I'm able to think about here is, maybe what if these unorganized players are doing better? What if because of a pricing war, these unorganized players are offering their paint and consumers maybe are not caring a lot more in tier 2, tier 3, even tier 1, you were mentioning that, right? Maybe they're not caring a lot about the quality because there isn't much delta in quality, but the price delta is so high that people are maybe opting for these unorganized paint brands.
And another reason could be, again, like rightly Sharik said, the pricing war. Recently, we also understood that the raw material costs for paints have increased a lot, and these companies, to again survive and even to grow, they had to forcefully increase their prices by some 15-18%, right?
I would also point out corporate greed. Them wanting to maintain their operating margins. Them not wanting to make their shareholders sad, because it's very counterintuitive. For the short term, they're looking at, okay, we have to maintain operating margin at this percent, otherwise the market will punish us. That is true. But for the long term, does it end up hurting them is also something, because they are driving up the prices. Even last month, if you're looking into it, all the automakers announced that they'll be increasing their prices, despite everywhere news coming out that lakhs of cars are being flooded in garages or warehouses across the country. So similarly, I think it's the similar case which is going out here. They want to increase their revenue, try to increase their profits. So some form of playing around with the prices.
And this is where the unorganized players come in and show the similar product. It is almost similar, 19-20, 19-20 ka farak hai, and then they'll just put this at much lower cost, and people would not care much about, they'll just buy it, and maybe that is what's happening, the shift is happening.
But for me, this is huge. I really want to dig deep. Probably my weekend, I will be spending some time on this. For me, this is like the curious case of the Indian paint industry. Because if it was just one company's revenue which is getting hit, I would completely understand. That could be that company probably up. We don't know. But this, if you look, all, like we rightly said, right, all the top brands, if you see, all of their revenues are not increasing. Which means the organized revenue pool of the paint industry, it is not increasing. I just can't understand. I know we discussed this point of unorganized players, but hey, that could be one reason. But I'm doubting there could be other reasons as well. So if you viewers, if you have some more points, do let us know in the comment section. But I would definitely take this up. I would read more about this. But hey, that's that. But now, the larger point here, the crux of the matter being, our favorite boy, Asian Paints, what's going to happen? What should investors think about it?
So talking about Asian Paints, 3 points here. First, despite the recent fall of 30% in the share price, valuations still remain high. The PE ratio of the company is still 47. I'm sure no value investor is going to touch that. Even the industry PE is also high. That's where I come to the second point, which is that the industry needs to prove that all the listed players and even the unlisted large players, they need to prove that the revenue, top line of the entire industry, it can be increased back up again. Right? And that's where the third point comes in. How can they do it? Either the economy needs to do well, either they need to do better marketing, or they need to start clawing back market share from what Sharik said are the unorganized players.
And I think that clawing back thing Asian Paints can do really well if they really focus on, because they have the biggest distribution in India, right? So if they really put their mind and effort into that, I think Asian Paints can still do better. But again, only time will have to say things has to fall in the right place. And recently they have been venturing into too many different businesses. They're even going to chimney, man. I mean, you're a paint company, you're manufacturing chimney. So there are so many things that they're getting into.
No, but that is them leveraging their distribution.
Absolutely.
They are, like, as Ajay said, they have the largest distribution network in India. So they are thinking, hey, we have distribution into all these homes which are newly being built. Then why don't we build more products for these new homeowners? Like including like home appliances and hobs and chimneys and more into interior designing.
Absolutely.
A lot of things they are doing. I think they are on the right direction. It's just that the macros of the industry is bad right now. When the industry gets good, I think Asian Paints is here to win. I really would bet my money on them.
Maybe I think they'll even come up with a one-stop solution for everything. You give them a house plan and then they're going to build you a house, then they're going to paint your house, then they're going to do interior designing, they'll give you appliances, they'll give you furniture, everything.
Yeah, interior designing as an industry is booming in India. Like Indians
absolutely.
have finally started spending a lot on interior designing, right?
Yeah. So, but at the scale which they're operating in today, 30,000 crores, paint makes up more than 95% of their revenue, despite chimneys, despite that.
Right.
It's still paint, right? So I think they'll have to focus on that to grow their business. That's the only major lever in the short term. In the long term, I know I'm contradicting myself a bit, but in the long term, they can definitely use that distribution network to market out different products, right? That can be a possibility.
But again, we also have to understand the competition is also high. They are also kicking in. Earlier, they were like the only duopoly or a monopoly, I would say. But again, new players are coming in, eco-friendly paints are coming in. So they have to like actually work on their R&D and, get things better. And this is where we have to actually move on to our third very interesting topic, which is SEBI regulation on algo trading, which Sharik was very much interested in the beginning again, right?
So algo trading for retail.
Absolutely.
That is what makes it very, very interesting, right?
Yeah.
So SEBI has come out with a draft circular. That's what I understand. And in that, they've talked about how algo trading for retail is going to be legalized very soon. They have given a date till the first week of January for the public to give comments. And from what we have seen in the past multiple circulars, I think this is what is going to be the final form, right? This is how algo trading for retail is going to shape up in India.
Yeah, I'll just give some clarity there. So we are telling draft circular. So what does a draft circular even mean? So SEBI, what they normally do is, first, with anything they are planning, they are thinking, they come up with something called consultation paper. So in the consultation paper, they put out their thoughts. Hey, this is how we are thinking. This is after setting up a committee, after talking to experts. This is what we think about something. And they put it out on something called a consultation paper. Then it is put out so that people, including us, we can read it and we can give our thoughts and comments to them. Then they'll take the thoughts and comments of the public, then they'll think about it, and then they put out something called the draft circular, which is after collecting the thoughts, after mixing it with whatever they already knew, they created the draft of the final circular, and circular is the final rule. Now this is the draft. Draft is the rough piece of the final rule. Now the draft circular has come out. Now this is also put out so that, hey, now this is how we are thinking. This is almost final on how we are thinking. Now if you have any more thoughts, you can give back. And most probably whatever we see in the draft circular is what will come out as the final circular, which is what is going to the rule. So the point here being, in 2021, SEBI had put out a consultation paper on algo trading for retail. And after these 3-4 years, after these long years, finally SEBI has come out with a draft circular, which means that in the coming year, probably within 1-2-3 months, we will be seeing the circular on algo trading for retail, which is meaning that algo trading for retail is getting regularized, it is getting formalized.
So when you're talking about all of this, the audience would definitely love to know, wasn't algo trading legal for retail till now?
Yeah, now that's a very, very interesting question, right? So if you ask about algo trading regulations so far in India, yes, there was regulations near to 2010, SEBI had actually put out a circular and proper rules on how to do algo trading in India. But the catch there was, it was not very retail friendly because it was opened up during the time of DMA, which is direct market access, and DMA was mostly for institutional clients. So around that, SEBI had certain rules around algo trading where even brokers can come up with algo trading strategies and can host it within the brokers and maybe offer it to certain people. But algo trading for retail wasn't very clear. People couldn't understand it. No one was doing it. But we always see people doing algo trading. We see platforms offering algo trading. We see a lot of people developing strategies using a lot of popular algo trading platforms and deploying algo trading strategies. So that is where after 2018, 2019, after all these discount brokers and these tech-enabled brokers came into the picture, scene changed when these brokers started offering APIs.
Yeah.
Right? Because all these brokers are offering APIs to the users. Now that was a whole world which opened to users, where users and also a lot of these algo trading platforms, where these platforms and these users saw that, hey, now we have these APIs. So now if we code certain algo trading strategies, we can send these trades into our broker via these APIs very seamlessly, and then we can do algo trading. So answering your question, it was legal. There were regulations around it. It's just that regulations for retail was not clear. Retail was using their APIs to do algo trading, and they've been doing it in a very large manner for the last many, many years. So that's where SEBI saw it. SEBI saw that, hey, retail is also doing algo trading. It's just that they are not using the original laws which are available, which is very complex, which is not even really facilitating retail to do algo. So SEBI thought, hey, why not? Why don't we do something special and specific for retail, so that retail can also do algo trading in a very good manner. And what is this good manner? With proper checks, balances, grievance redressal mechanism, which means that if something's happening to the retail, can they go and complain? Can they get their complaints resolved? So SEBI is thinking good for the retail here. So SEBI was seeing retailers using APIs and all. What can we do to make them world better for retailers? What at least SEBI is thinking is what I'm feeling.
So I understand that even today in the Indian market, algo trading makes up 70% of the entire volume. Okay. Yeah. So why does SEBI want to put so many checks and balances suddenly on retail now?
Right. So this 70% I know is a large number, but most of that, as I rightly said earlier, these are large institutions and prop firms, all of them doing algo trading in the already regulated way. So there are already checks and balances built into those. So now when it comes to retail's algo trading, which is very, very minuscule, it's not like as big as 70%. So when it comes to that, SEBI wants his checks and balances there as well. Why? Because they are concerned, because this is via API, users are sending in trades, which is driven by algorithms. It could cause systemic errors, is what SEBI is worrying. There could, like, we all understand what a fat finger trade is, right? A fat finger trade is where someone by mistake puts in a large quantity trade, and by mistake is like sending in that order to the exchange, and it could cause flash crashes. It could cause unwanted price movements, which is not really nice in the market. So all of those is what SEBI is worried about. So SEBI do not want this retail to play around with the market, create some troubles, create some loops which would crash the market or cause some troubles to the price movement. So that's what SEBI is thinking.
But
So
again,
I think that is actually SEBI's way of putting some panic in people. In reality, which retailer would have hundreds or thousands of crores? I mean, in a normal scenario, I know there could be exceptions.
Yeah.
In a normal scenario, retailers are not trading with hundreds or thousands of crores, especially in algo. So I think in the end, they just want to regulate it. They just want to. I see this as a positive step for the industry.
Yes, so SEBI is just trying to protect themselves, obviously, to the larger interest of the entire market.
Yeah.
So I understand one retail person might not have thousands of crores to actually do some nasty stuff to play around with the market, but because that route is open, if someone want to really mess with the system, can actually take that route, posing as a retailer. What is posing as a retailer? It's just getting your broker's API and sending in whatever random stuff you want to do and game the system. So if someone wants to do that, they can do it today, and that's why SEBI really want to take this good step in regulating the space so that no bad things will happen, and maybe some good things which were happening earlier. A lot of people used to get a lot of liberty in around with strategies, maybe that might get reduced a bit. But I think this is a good step overall, right?
Understood. So what are the new rules that are coming up by SEBI for algo traders?
Right. So very interesting. So their point being, so they are more concerned about what strategy is being run. Because if the strategy is bad, if the strategy is having some loop creating, trouble creating rules, that is what SEBI is more concerned about. So that is one last thing that SEBI is concerned about. So SEBI wants the strategies to be passed by the user to the broker and get it approved at the exchange.
Okay.
So what is the purpose here? So when it is getting approved at the exchange, they are kind of sure about, hey, the strategy is all okay. It is not trouble creating of sorts. So the process they are telling us, if you're a retail trader who is tech savvy and creating your own strategies, either yourself or even using third-party platforms, you have to go to your broker. You have to, via the broker, send your strategy to the exchange and get it approved, which I understand the retail trading fraternity is not loving it. What is very interesting is that even Nitin Kamath tweeted about this. He also wrote in Trading Q&A, which is their forum, where he is saying that there is a possibility where tech-savvy retail traders, if they have strategies of their own, or again, if they got it from somewhere else, they can maybe get a static IP, get it whitelisted. Maybe then there is a route where they don't have to send it to the broker and then to the exchange and get an approval. So to be very honest, that is slightly hazy today and a lot of mixed opinions from the trading fraternity as well. But that is where. So that is regulations on people who have their own strategies. What will happen to them?
Yeah.
What is very clear is algo strategy providers, what will happen to them? Because we understand the ecosystem is huge. A lot of people are there today who are developing algo strategies and putting it up on their platform or on a marketplace and then giving the access to people, and people can go subscribe to these strategies and then, hey, things will happen in their account, right? Now, SEBI is even giving a name to this in the draft circular, calling it black box algos. And black box algos means everything happening inside is staying inside. You can't see it. So it is a black box algo. So what is very interesting is SEBI is clearly putting out regulations and a very laid out world where people can actually develop black box algos and offer it to retail traders. So retail traders in the future can go to certain platform, subscribe to a black box algo, and the trades will happen in the user's account. And if the trades are making profit, hey, the user is making profit. So what is interesting here is, if someone wants to create and put out black box algos, this entity, one, will have to be registered with SEBI as a research analyst.
Oh.
Two, this entity will have to be empaneled with the exchange, which is NSE or even BSE, as a empaneled algo provider. So they are coming or being recognized by both SEBI and NSE. It is going to be, there is going to be a lot of scrutiny. It's going to be a regulated world. Then they will have to work with the broker, give the strategy to the broker, and the broker will take it to the exchange, obviously, for approval. Once all this is in place, then they can offer it to users.
I
so
mean,
that is how
I think it's end of the day, it's a very complicated procedure, because in itself, it's a complicated world, right? Algo trading is a complicated world. But I think when the smoke clears out, things for the user or the end user might seem very easy, right? That's very much regulated. That's what SEBI is going for.
But again, I'm only worried about the turnaround times of these. Let's say, as a genuine retail guy, I want to create my strategy. First, I have to get the whitelisted IP, which is again 6,000-7,000 rupees in current day. I have to spend that. Then to get an again API from a broker, I have to again pay. I have an API from Zerodha. Then again, I have to give my strategy, which I should trust that my broker doesn't give out my strategy to anyone. Then I also have to trust the system, which is SEBI or the NSE, to understand logic of my strategy. If they fail to not understand what my logic is, what my system is, they could just simply reject it. That would be very bad for me, very depressing for me. So I'm just worried about the whole systems and processes. And even one more larger concern. I made a strategy, they approved it. Then, like how the markets are changing very fast now these days, I want to make a change in next month. And what if SEBI takes another 2 months, 3 months to even approve my algo?
I absolutely hear you. I absolutely not just hear you. I see a lot of conversations happening in Twitter, on different social media platforms. I see a lot of questions are open, and a lot of traders who, like you, who are developing their own strategies, a lot of them are not liking it. I also have a lot of open questions, but I'm not asking them here. I don't want to look like a person who's completely liking this, completely with this. Hey, full pro SEBI, let's get this done. This is the best thing ever. I'm not saying that. while I agree that there are a lot of open questions like, hey, if you want to change your strategy, what is the process? Like, how do you change? Do you approve it again? All of this. A lot of open-ended questions here. But hey,
Yeah.
my larger point being this is a good step
Absolutely.
towards a better world where algo trading can be proper. Because for me, if I think about it, hey, back in 1990s, people used to stand in the ring and yell out
Yeah.
for buying stocks. Then towards 2000s, you could actually make a phone call and buy stocks. Then in the 2000s or post 2010, you could go to your website or to your laptop or a phone for that matter and buy a stock. Now, so things are progressing, evolving, and algo trading, I believe, is an evolved form of trading that has to happen, that will happen. So I think this is a good first step in that direction. And hey, it's our regulators, they'll also get better, they'll also learn, they'll hear from us. I strongly believe in them. They'll hear from the entire ecosystem, they'll also get better, and better regulations are on the way is what I believe.
And when I read the circular, the tone in which the things have been conveyed, I think it's a very progressive tone, right? I understand that every point is not progressive, and maybe there are a lot of things that they'll get suggestions on and they'll get better on, but the tone is progressive.
Absolutely.
That means that right now, what I believe is they want to start this movement.
Yeah.
Okay. Put that first step out there.
Yeah.
Might not be too strict now, right? Things might be a lot easier for the first group of algo traders.
Correct.
And going ahead into the future, they'll see if any problems are being created, because now they'll have every order being tagged as algo order. They'll have a kill switch. The exchange will have a kill switch with which if they notice any problem or any issues in the strategies, they can issue a strategy kill switch, right?
So whatever they originally feared of, like systemic risks or such mess ups with the system, if they're seeing that, they can quickly
Instantly skill them.
utilize the kill switch and get rid of the algo. And also there is a mention of audit trails, because this is being hosted on the broker system, and these audit trails are also maintained. If at all, if they find that something is happening fishy somewhere, they can easily go and identify which algo triggered by which person in what manner is creating problem. So at least they can be reactive to certain bad things happening in the market. They can actually find whatever wrong things are happening. So good.
So
good moves.
what I want people to take out of this segment is that, hey, these rules are definitely coming out. It's a step in the positive direction. And I think now is a good time for the Indian market to shift into that algo trading world for retail.
Yeah,
right?
so that's what I was saying earlier. It's an evolution. So if you like 2-3 years before, like when this YouTube is booming with stock market content, like people are teaching how to use these indicators, how to look at your charts and take trades of your own. So that itself could change.
Yeah.
Maybe like few years later, we're looking at videos everywhere where people are talking about like how to think of strategies, how to create strategies, how to code strategies, how to like get it running in your broker. It could be the new normal. It would be in the new normal is also
I
what
would
I'm
only
thinking.
seeing that the new videos would be coming out how to use AI to make more strategies and then just automate
Absolutely.
it.
Why would you sit and look at where MACD is and like, look at what the like candle is doing and what the price is and what the skew is and then take a decision, while you can actually code it and click a button and the computer will do it like 1000% more efficient than you and get it done without any emotional bias. Why would someone not do it? So I believe it is the future and people would do it, and SEBI is starting to facilitate it. So a good start is what.
And yeah, with the passion that Sharik talked about this subject, you can know that we are very much in the game right here, as in Market Feed is in very much the game, right? So let's wrap up this episode of the Aftermarket Podcast. 3 interesting stories. First 2, very much for the casual investors. And third, I would say for the casual traders, because earlier this was only for pro traders, algo trading, but now it's coming for casual traders as well.
Yes.
So as always, you are the 4th participant of the show. If you have any thoughts or any comments and discussion points, make sure you let us know in the comments down below. We can have an open and honest discussion there. So yes, let's wrap up this video. Make sure you go subscribe to the Clips channel. Nihal keeps reminding me of that. So that you can see portions of this video in a very bite-sized format. And this is Ajay signing off. See you all again. Bye-bye.
Absolutely.
Bye.
And even if anybody would have forgot about the shorts, we put out shorts also in a very crisp and interesting manner, so they can check out the shorts as well.
Nihal wants to make a point at the end.
Absolutely.
I'll say that next time.
Okay then. Bye-bye.
See you guys.
Yeah.